The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 29th Turnaround Tuesday edition of today's Trader's Edge show. I'm Rhodes TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great trading day, a great day in general. Let's make sure that you and I do everything we can to have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, you and I, that's a little Rubik's Cube. And as soon as we can figure out the combination of the Rubik's Cube, which is understanding that life happens for us versus to us, it means you and I, we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets that we trade. We get to go look at what the bulls and the bears, the buyers and the sellers are communicating to you and I. We're doing that at just past 1 o'clock in the afternoon on the East Coast. I want you to know I'm absolutely grateful for your presence here. More importantly, though, I'm here to serve you. So feel free to pick up that phone. Look, I know the anxiousness, the anxiety with picking up a phone, calling into a talk show. It's actually easier to do the talk show than it is to call into one. I call into radio shows every now and then. My heart starts to flutter a little bit, but there's nothing like overcoming hurdles. We're going to go take a look and see what kind of hurdles the market is overcoming today. But look, give me a call if you'd like, 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. I'll try to get to that. Of course, inside the Tiger's Den, a ping here and there will work just as well. So let's get this terrific Tuesday kicked off here. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 169 points. Trade out at 17,697. S&P trading up nearly 19 points at 2075. NASDAQ Composite, she's up 55 points. That's a strong dog in the hunt today. She's up trading out at 5,096. Russell 2000 up 4 points at 1152. DAX closed up 206 points. FTSE closed up 59. Gold is flat, and I do mean flat, trading at 1068.30. Silver's up a nickel. Light sweet crude is up 90 cents, trading at 37.72. That the support level that you and I looked at yesterday has held thus far. Natural gas having a huge day, trading out at 235 right now. Priceline is the leader dollar-wise to the upside. That's up about 1 3/10%, up 22 bucks. Amazon up 2.5%, up 17 bucks. Google up 16 bucks, up 2%. Regenerate Pharmaceuticals up 11, Biogen up 7, Intuitive Surgical up $6. To the downside, let's see, if we look at individual stocks, you've got Chipotle down about $3, Acuity Brands down $5. Hanwha Q Cell, that must be a Chinese company. That's off, I don't know if it is or it isn't, but sounds like it could be. That's up about 260. If it's not, my apologies. Tallgrass Energy Partners down 230. United Therapeutics up a couple bucks. So nothing really big to the downside individual stock-wise. And so where should we begin? Let's begin in essence where we left off yesterday, right? Which was, let's go check out the 30-minute chart here for the ES Mini, right? Because that was giving you and I was the two 10-minute charts inside the ES Mini, the NQ, as well as the 30-minute chart here inside the ES Mini. What am I referring to? I'm referring to being able to read the emotion of the market. Yes, sometimes people speak with folks and they say, I just wish I could trade without emotion. Now, what that would mean, though, is if you could trade without emotion, so could the guy or gal next to you and the guy or gal next to them. And then it would be really hard for us to figure out or understand why the markets are doing what they are doing or when they're getting ready to turn. What you and I want is we want to be able to identify and track and understand the emotion of the market. And that's really the pattern here. When the markets are moving lower, they're doing it with less conviction. There's a number of different ways to identify conviction, but you and I should use the ones that work and have worked have stood the test of time. You and I have taken this pattern back into the 1860s. I believe it was the 1860s out there, at least the 1890s out here. I believe it was the 1860s. It worked then. It worked yesterday. It's going to work tomorrow. And that was where price was moving lower, doing it with less relative weakness out here. And since then, we've seen the reversal. Now, this morning, late this morning here, in fact, we had that nice big move at about 9 o'clock, as the market was opening. Nice big 30-minute chart we're looking at. We saw that nice big push to the upside. It was doing it with less relative strength, but the cash market hadn't opened up. This is the futures contract that we're looking at. Move sideways for the first half hour, and then boom out of the gates 9:30. It was an explosive move to the upside, yet it was still moving higher with less relative strength. Now that pattern, in essence, has gone away. This is the 30-minute chart that we're looking at as it moved higher into that time period between 10 and 10:30. Now that doesn't mean that okay, it's over and prices are moving. We got to go evaluate the charts and what they're communicating to you and I. Now, here's what you and I know. We take a look at the S&P futures contract. We know this unequivocally. Isn't it nice to know something unequivocally? And that is this, that if we take a look at the candles that have been forming over the last couple hours here, I'm referring to the one that began at 11 o'clock, nice old bearish engulfing candle, also a key reversal session. What do I mean by that? Well, what the market means by that is that on this candle here, the actual high was 2069. Even Steven. Okay, that's easy to do. We only move in ticks out here of 4. If we take a look at the high of the prior candle, 2068.75. So we see how this candle here at 11 o'clock, the prior high was exceeded, the prior low was exceeded, and we just simply needed one tick in the direction of the opposite of the trend that it was coming from. In this case here, we actually engulfed the entire candle. That says that this level is significant resistance. Now, how do we know that? Hey, you know what? The next very candle said, I don't believe in that hogwash out here. And that was a candle 11:30. But it really didn't do anything. It was an inside day. And then the candle session here at 12 noon, another bearish engulfing, another key reversal session. So if you wanted to understand where is it that sellers are loaded up, and when I say loaded up, we don't know how many. We just know that with regard to the front line of the market in trying to identify where the buyers and where the sellers are lined up, that's really our role. That's our responsibility. Then it's your responsibility to go ahead and take whatever trade, adjust whatever stop, manage the trade. Or maybe you're not in a trade. You're just watching this battle unfold out here. Here's what we know is that those sellers would be overrun on any move. And I'm not talking about a tick out here, but any move above the level of 2069.50. At this stage, that's the high of the session at 12 noon. We also have a nice little TAS market profile. Now, that TAS market profile out here, we can see that the black line, in my case here, the black line support, closer to the navy blue line out here. Speaking of navy, nice game yesterday. But now we can see how that is closer to the bottom. That says that it's actually buyers in control out here. So we're in a fairly narrow banded range. So we really know where the battle is in the 30-minute time frame for the S&P futures. It's between 206.950, I believe was the number, and 206.450 as well. So you got about, that's like a 5-point range out here. Now, maybe we just see prices move sideways. I don't know. If we take a look at wave counts out here, let's go take a look at those. I don't know that those are helping us so much. We exceeded the 7th wave. That 7th wave, it looked like that was it. It looked like it was curtains for the ES Mini. But it was more like blinders, not curtains. What do I mean by that? I mean that price had gotten to that 7th wave, key reversal session, didn't have that price relative strength divergent pattern, but that's okay. We don't always get everything we want out there. We just get the things that we're looking for. In this case here, we're looking for, hey, is this going to be a reversal point? Well, turned out it really wasn't because of that session as we came into 12 noon from 11:30 to 12 out here, because it just simply recycled higher as we take a look at the wave counts out there. So if you're wondering why anybody went ahead and maybe took a trade going short, it was a pretty easy thing. You had your 7th wave out there. You put your stop one tick above that high. And in this case here, you'd be stopped up, but you didn't have to risk a whole lot. Now, so what does this say to us? It says, hey, wave count wise, now we can kind of struggle here. Where do you begin that next wave count? There's a couple places. We're not going to spend any time on that as we speak right now. Here's what we know about the ES Mini. We know where the battle is. Now, if prices move higher and take out the sellers, where's price going to go gravitate to? Excellent question. I would say, well, and we're going to go look. We're not even going to say. We're going to go say, what's the message of the markets out here? And the message of the markets says the following. Here is the daily chart for the ES Mini. What do we know? Well, we know that what the ES Mini has done on a daily time frame, if we just simply start from the swing point, the trading session of December 2nd, and then in essence what we can do is tag the high from a few days later on December 7th. We can see how that ran into very close to just slightly below the high of December 17th, ran right into the high of December 24th out here. We can see a nice little trend line that formed. And guess what? Price moved above the trend line. So where is support? Support, very simply, is not any move back, coming back and testing that trend line. Where is that? Well, it's approximately at a price period level area of 2054 or 2068. That's a 14-point move. That's most days that would be a pretty decent move out here. But these days we do basically 20, 25-point moves, it seems like, within 24-hour period of time inside the ES Mini. It's a trader's paradise. There's no question about that. But in this case here, with regard to ES Mini, let's answer that question. The ES Mini has broken through the trend. We watch that 30-minute chart. That 30-minute chart takes out resistance zone. It says that 2102 is absolutely game. What's that 2102? That is our weekly TAS market profile high out there. That should be resistance. That also makes a 100% move, gets back to the November 4th level out here, the November 3rd level. If we take it back a little bit further, it gets us back almost to the July levels out here. And it just seems more likely than not. That is the most plausible situation that we're in as we speak. Now, let's take a look at the ES Mini. We got to go. I mentioned that the NASDAQ itself, was on fire. What do I mean by on fire? Do I mean fire sale? No, I don't mean fire sale. I mean on fire. When I say on fire, I mean it was up about 1%, 1.4%. Yeah, the NASDAQ 100. Nearly 1.5% as we speak right now. The NASDAQ Composite, a little over 1%. So the NASDAQ 100, zoom to the upside. But let's take a look at what the NQ is doing. So let's go do the same kind of thing out here. Let's take a look at that 30-minute chart. Now, in this case here, right, we took a look at what it was doing yesterday on the 30-minute chart. It didn't give us that same pattern that we looked at on the ES Mini. That's why we got to look at multiple tools out here. Now, what price has done, if this is in its 7th inning stretch out here. Okay, so the ES Mini, took it out by what, 2 ticks, 1 tick, something like that. But the NQ, now it's moving higher. It's doing it with strength. It's doing it with gusto out here. It's in its 7th wave move. Excuse me. I got a little piece of dust in my throat out there. That's that breathing exercise. Not even, we're in the 7th wave. So it says, something to think about. It doesn't mean it's going to reverse on a dime, but it does mean we need to pay attention. So we get back from this break. Let's go take a look at the daily chart of the NQ. Let's go take a look at the price oscillators. Let's go look at the VIX index and anything else that you'd like. You just got to give me a holler. 877-927-6648. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Give me a moment here just trying to find a document. There it is. This will take a minute to load out here, but I wanted to take a look at it so we can go look at the equal-weighted ETFs versus the index ETFs, like the SPYs and the Qs out here, just to see if there's any kind of divergence. So let's and specifically, we're going to take a look at we'll go back, we'll take a look at the Qs, we'll go take a look at the composite. We'll spend a bit of time out here, and as we take a look at here we go. If we take, whoops, that's not working right here. So let me do this here. Window, tile, everything. There we go. No, that didn't work either. Very, very odd somehow during the show here where these tools don't work exactly like they're supposed to. Okay, back to now it's the QQEW equal weight. Makes a lot of sense, right? That we're going to take a look at versus the weighted ETF, the Qs out here. And what we can see is the swing point that the Qs are above right now looks like is December 16th. And that crosshair doesn't look that great on here, but we can see that the QQQ series bottom panel, green line, is above that level. But we can also see that so is the equal weight. So no divergence here. In fact, the equal weight actually looks stronger than the Qs do. Now, it's the equal weight that typically paints the picture out here. And what I mean by that is the equal weight is almost back to really the December 1st highs, and the weighted ETF, the Qs, are not. So it's actually looking pretty strong. That is its message. That is at least the Dr. Stevie's message when I take a look at the EW, the QQEW versus the Qs. Let's go look at the SPY out here. So let's go find that chart. That's lurking somewhere right here in front. There we go. I like to say this one because it's the RSP. This is the Guggenheim ETF out here. It's the equal weighted ETF. And as we take a look at it, we can see that on the equal weighted basis. How about this? The equal weight is stronger than the actual weighted version. Now, what I'm looking at here is I'm looking at the trading day, again, December 16th. Is the deal. So December 16th, we can see that the equal weight, the top portion, the blue line, is actually trading right now slightly above that level. Whereas in the case of the SPYs, it is not. It actually bodes well for the bulls out here. Now, I don't know, this chart here, when I take a look at divergences, it's an end of day. The lines on my chart are end of day numbers out here. So it really depends on how the day. But what I can tell you, as of 1:26 p.m., it's not bearish. That is for dang sure out there. What else could we look at that's worthwhile to look at here? I don't know if there's anything else I really want to look at. We can look at the GE versus Dow. That always helps us identify if there's problems. The bottom panel of the chart is GE. When there's and GE is the number 29, I believe. 29 or 30. I think it's 29 as far as weighting inside the Dow. But for whatever reason, I think it had more relevance. It still has relevance, but more relevance when it had its fingers in basically everything. It has been, and I will say it's been up to this point in time a pretty good signal of the health of the Dow. And when it diverges, the direction of its divergence really tells you what the market wants to do. Well, interestingly enough, GE is also over that December 16th level, whereas the Dow itself is not trading into that area. So, we'll just take a look at three simple little tools out here that you can do as well. And, it's telling us that it says this is pretty healthy, the move out of here. It's not like it's unwarranted. So what does that mean? Let's go back and take a look at the 30-minute chart here for the Qs. That's the one to be paying attention to, and the reason that you want to pay attention to it because it is that seventh wave move. We cannot underestimate the power of a potential failure. But the trade here, if you want to take the short side, is wait for this 30-minute chart here to complete. Each 30-minute, wait until you have a confirmed seventh wave move out there, and then just put your stop one tick, above that level. It's not there just yet. As we take a look at the daily chart and we switch back here, just like we did when we took a look at the ES Mini, that's as we flip back to this chart, you're going to see the upper left-hand corner. That's the ES Mini. Price is broken out above a descending trend line. Bullish, not bearish. Upper right-hand panel, NQ, even stronger. Price is broken out because price is broken has taken out diagonal resistance. That's a trend line. Taken out horizontal resistance. Those are the horizontal lines of our TAS market profiles out here. So, with regard to where the sellers were lined up, they've just simply been pummeled. Just like what's the game at 2 o'clock today? That's the Air Force versus who's the Air Force playing today? I can't remember off the top of my head. The NQ looks like it's headed to 47.22. That's really its next level of PS. De resistance. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 179, S&P's up 20 points. And let's go check in on these advanced decline oscillators out here. Specifically, we're going to start by looking at the NYSE. So we've got the New York Stock Exchange here making a slightly higher high than back here on December 24th, December 23rd. December 24th really was the high price-wise, 10,290. Now this is ultra short term, but we can see the price oscillator reading around 161. Today you are at a reading of 146 out here. So we're seeing a higher high in price, and at this point of the game, a lower high inside the advanced decline oscillator out here. Now, those are the type of, I don't know how it's going to end it. Again, this is an end of day tool out here, but this would be an indication of a divergence. It shouldn't occur. It shouldn't carry on. That would be worthwhile. If we take a look at the last time we saw that divergence out here, it's when the NYSE was October 9th. It made a high of about 10,400. Price continued to move higher for a couple of weeks out here till November 3rd, but we saw that declining tops price oscillator. It was an indication, of an impending move to the downside. You don't know if it's a top, major top, just a retracement. You don't really know out here. And so we may have the beginning of that. That's what the New York Stock Exchange is doing as we speak right now. If we take a look at the NASDAQ composite, strong like a bull out here. We may have a similar pattern. In other words, a couple days ago, December 24th, oscillator reading of 33. Today, you're at 29, with that nice move. So we'll see. That could be the clue that we would be looking for as we end this year and go into next year out here. So we want to keep our eyes on just little subtle things like this. But for the day, things look pretty good. I don't anticipate. There's nothing that you and I have looked at that says that we have a sellout. Now that NQ chart on the 30-minute, that's the one that we've got to watch. If it recycles, takes out that seventh wave at some point between now and 4 o'clock, that would be very bullish out here. Inside of the Dow, really the same thing. December 4th, we're well over those highs, but we don't have a higher high in the oscillator reading, or do we? No, we do not. So that's a little subtle thing that we'll continue to monitor. If we take a look at the VIX index out here, it's another thing that just says caution, Will Robinson. What do I mean by that? Well, we looked at this yesterday. We have really two nice bullish candles, meaning that on Thursday, we saw a nice little hammer candle form. So it's really the low of that session that is the one you want to pay attention to. If the market is overall significantly bullish, you will see the VIX index close below 1445. It'll take out that hammer low. Doesn't tell us where it's really going to go to, but just something to watch out here. It's traded at 1621 right now. So we're not getting, my opinion is we're not getting a bearish signal, that's for sure. A little caution, just a little caution to the wind out here when you take a look at the VIX index. If I take a look at how they're trading, how they're trading says something's out of sync here. And what do I mean by that? Well, I've got all of the future months contracts up on my screen. And we can see that if we go all the way out to in 2006 to, what is that, September? Yeah, September 2016, your VIX is at 1982. So, longer-term traders are saying, I don't think so. Now, that alone you can't trade off of, but it is important information. It's like it's like sailing. You want to know, where's the current coming from? Where's the wind coming from? What's it look like a little further ahead? That's what you and I are doing. We're taking a look, hey, what's going on right now in the current? We're present. It's so important to be present. So we're present with the market. We're letting it feed us information. Doesn't matter whether it's bullish or bearish. That's not the deal. It is what's the information that is present. And then we like to look out into the horizon. We did that by taking a look at the advanced decline oscillators in the Dow, in the NASDAQ, and the New York Stock Exchange out there. Okay, so we've got that out of the way. And before we went to break, I was trying to take a look at just simply the advanced decline oscillator inside the NDX 100. Now, this is an end-of-day deal that I've got to manually update. But is this really telling me anything? Not really. No real message here that we have to pay attention to. So let's go to Thailand and speak with Mike Guggenheim. No, Mike wants to probably speak about the Guggenheim ETF out there. Mike, how you doing?
All right, pretty good. You come up with some real quick ones. I got to really laugh sometimes.
Oh, good.
But anyway,
it's good to know that somebody's laughing with me, at me. So that's good. That's always good.
I guess we misunderstood each other. Nah, I'm just kidding. I'm laughing at myself. Don't worry about it.
No, you're laughing at me. No. That's the deal.
No.
I'm the one that you got to laugh at.
No. It's just funny, the stuff you say. But thanks for saving me some money this week, and because I'm not going to touch the short side, but I really don't understand the Guggenheim thing. You showed it on the SPY, and I thought it was really interesting because it correlated perfectly, at least I thought so. Maybe I wasn't paying enough attention with the SPX. Do you see?
Yes. Well, it does. What it is, Mike, is so we've got our weighted ETF structures out there. We've got the Qs, we've got the diamonds, we've got the SPYs, and so those are weighted ETFs. And sometimes, so if the heavy lifters, the stocks like inside the Qs, right? If we take a look at what that weighting structure, let's actually see what it is in the SPYs. So let's do that. Let's take a look at the SPYs out here. Let's go see what that weighting structure looks like as of last night's close. And what we're going to take a look at, Mike, here is the top 10 weightings inside there. So inside the SPYs as of last night's close, Apple was 3.3% of the entire weighting. In fact, the top 10 holdings inside of the SPY, which has 504 constituents, not 500, but the top 10 represents 17.74% of the weighting structure. So if those stocks are doing really well today, it could be giving you and I a different message about, in essence, if they were equal weighted, which is what the Guggenheim ETF is, could be giving us a different message. So what we like to do, what you and I like to do, is periodically take a look and see, is there some type of divergent pattern? Now, it is usually the equal weighted, the divergent pattern in the equal weight that sends us the message as to what the market really wants to do. It does not work 100% of the time. It works like 90+% of the time. Very few times is it really off. And so just in taking a look at today's move, my question to myself was, because I hadn't looked at the chart, was, hey, the swing point from a closing basis is December 23rd, actually, right now that we're looking at. But really, I was looking at December 16th. And let's take a look at that high and notice that the equal-weighted ETF, the Guggenheim S&P 500, is trading above right now that close on December 16th. Whereas the SPYs, where the top 10 stocks represent 17%, is not trading above that. This tells me that, because oftentimes people talk about the unhealthiness of the market, whether it's a New York Stock Exchange, whatever it might be. To me, this is a way to do a quick little, this is like going to a minute clinic. I don't know if they have those in Thailand, but if you're down here in Florida, and you get sick, you can go to just, you got the 30-minute oil change for your car. You go to a CVS, you go to a minute clinic. I doubt it takes a minute to actually, it's just a cool name, but, our minute clinic, when we take a look at the stock market, is the equal weighted ETF versus what the weighted ETF. And it's usually the equal weight that really tells you about the health of the market. In this case here, at 1:43 in the afternoon, says that the move is real. That's my that's my interpretation. That's what I've learned over the years as to paying attention to those signals. And as I pull this back on the screen, you'll see some of those different diverging patterns out here. So it's really, now it's an end of day tool, Mike. So whether it's going to end this way or not at 4 p.m., I don't know.
Well, you know what? Go ahead. Go ahead.
No, you go ahead. Go ahead.
You know what I was doing? I was doing something really stupid. I shouldn't even admit this over the air, but I don't care anyway. I think by now everybody knows I'm not the sharpest knife in the. Not everybody knows, but enough know I'm not the sharpest knife.
That's good. That means you're not going to get cut a lot. You got to be careful those sharp knives.
Yeah, well, I use dull knives when I try to cut myself. That's my problem. So anyway, you know what I was doing like a dummy? I had my Thinkorswim on when I was looking at the SPY, and here you are, you're showing me what you're supposed to be showing me, and I'm looking at my my Thinkorswim just because it's been that kind of a day. Do you see? Can you hear those chimes going off? That's what got me, So
okay.
Anyway, it's not. Go ahead, Steve.
No. So look, it's best. That's how you really should use the equal-weighted ETFs. You go back and I think on the Thinkorswim application, most applications, you can put one chart at the top, one at the bottom, and then you can go take a look at correlations. So I just feed you the clues, and then you go back, do the homework, and say, yeah, this Rhodes guy actually, that's pretty cool tool. He knows what he's talking about. Otherwise, you can say, he's not worth a hill of beans out there. But go back and take a look at it and see if it's a tool that you can use to help identify, what the market is doing. But right now, looks like the move is pretty real. That says, there's really no reason that the market shouldn't move higher tomorrow and the next day. At least that's its message.
Hold on a minute. That should not move higher? Should
move higher.
Oh, okay. So you're sticking with, because I think you're making a lot of sense. They're going to rally these markets for the rest of the for the rest of the year, and rest of this week. Sorry about that.
No, that's okay. But look, our message is what the market is communicating to you and I. We don't have to even use our opinions here. We just have to properly read the tea leaves. And what the market is communicating to you and I, look, just like the correlation between the New York Stock Exchange and the Dow, what the market's communicating to you and I is that it's healthy. It wants to move higher out here. And until selling or sellers show up or some type of signal shows up, we just have to go with what it's telling us. You know, in this chart here, when we take a look at the New York Stock Exchange, that's the top portion of my screen, versus the Dow at the bottom portion, divergences inside the New York Stock Exchange typically paint the way. Well, that being the case, again, these are on the close. We're taking a look at line charts out here. And if we take a look at December 11th, looks like right around December 11th, and again on December 18th, you will see that the closing price for the New York Stock Exchange was basically like a double bottom. We're not taking a look at the intraday highs and lows, in this case here, the lows. We're only interested in taking a look at the close out here. Unlike the Dow, which is the bottom portion, which actually made a lower low on December 18th. That was saying that the wider swath of the market, the New York Stock Exchange, was communicating to you and I that the market was making a bottom. Because New York Stock Exchange was just really making...
Excellent point. Larry Pesavento would he would be in total agreement with that.
Okay, well, good, because that's its message, you know. Now, does it work 100% of the time? No. I rarely have I found a tool that works 100% of the time. But it works. It is worth absolutely, you know, paying attention to. So you know, but when somebody finds that tool that works 100% of the time, you know, please call me. I want to use it.
Well, if that were the case, you would have more money than what's his name, Jim Cramer.
It's not about having more money. It's about having, you know, good tigers and tigresses that are part of the TFNN nation out there. That's what it's all about.
Well,
all right, Mike?
I guess you got a good point there. By the way, it's not caution, Will Robinson. It's go ahead.
No, caution. Who is it?
It's danger, Will Robinson.
Danger. Yeah, that's true. You're exactly right. Boy, that's just because I'd have to really dust off the last time I actually watched one 30-minute segment of that. But you are absolutely right. And thank you for sharing that with me.
All right. Well, that being said, do you think Penny and what was it, Penny or Judy or did Penny and Don? Do you think they, you know, they always kind of hinted they?
I don't know the answer. I can only answer things. Penny and Leonard. I think, is that who you're referring to or no?
No, Penny. They had Penny on the show. There were,
okay, right.
Yeah, and no, of course, nobody would have none of them would have gone for Dr. Smith, but then Don.
That's true.
I think that was his name, Don.
That's true.
You know, so anyway, you know, that's about the deal. But thanks a ton, Steve. Thanks.
You
for
bet, Mike. Have a happy New Year, and we'll see you on the other side.
Do you have time just for a real short question?
We're going into a break, and then we've got the last segment, so I really should cover a couple of other things. But type it in the den. Tell me what it is you want me to look at.
I was just going to say I'll type it in the den.
Perfect.
Thanks
Okay.
a ton.
All
Okay,
right. Steve Rhodes with TFNN, and that was up 193. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 198 right now. S&P is up 21. The question that Mike in Thailand had was, what do I think about a January flop? And I presume that what Mike's referring to is the tendency inside the stock market. This is not January 2nd, 3rd, 4th, 5th, and 6th that tells you which direction the market goes in. Okay, you're going to hear that. You're going to hear these folks come next Monday, focus in on whether the Dow closes up or down on Monday, and then Tuesday, and then Wednesday, and if we have 3 days, 2 or 3 days of movement, in a negative direction, they're going to tell you that as go those first few days, so goes the year. That is the biggest BS line out there. And now, look, I realize these guys are just paid to just read a monitor. They're not really doing any of the work themselves. They're just simply, their ability is to be able to read a monitor out there. That is not true. It is so far from the truth that Lewis Black. I wish I could do a great Lewis Black imitation out there, and I actually wish that I could maybe kind of use some of that vulgarity every now and then, because it'd be like it'd be in fun out there. But nothing could be further than the truth, because what Mike knows, what you know, what I know, is that the Dow moves down into about January, to be specific, January 29th. So if that's what the January flop, what Mike is referring to, that's normal. That's very, and sometimes it starts like right out of the gate, like yesterday, which had that potential. Remember, I suggested, this is where I was coming from, that the market closed lower yesterday. The preponderance of evidence was, and I was wrong on this, the preponderance of evidence was that the market would just start cruising really through January 29th. There's a likely time frame out there. But look, we have to pay attention to additional patterns, other patterns as well out here, or look for other confirming signals. So with regard to what could happen, so you should anticipate that. If I take a look at the New York Stock Exchange as an example, here's what we know, and it's the following. We know that price was moving higher and doing it with less relative weakness. Right, the same type of pattern that we like that yesterday as the market was moving lower. Right, these patterns work all the time. Same top that was out here in 2007. Well, guess what? The market did move lower in 2015. You cannot argue with that. In fact, what the market did when we take a look at the New York Stock Exchange was it broke all the way down to where it should have. It went down to the trend line. The trend line from March of 09. The trend is your friend. Until that trend is broken, folks, until it's broken, you have to presume that it is the bulls that are in charge here. So the January flop, if it does flop, price heads down to the trend line. I don't know if it'll take it out. I don't have a clue. What we do know is that the market had every opportunity during the unfavorable season to take that level out. It could have done it in August. It could have done it in September. It could have done it in October. It didn't. What does that mean? It means to me, and we're in the favorable seasonal cycle. Yes, there's supposed to be a move down into January, but maybe that move just simply goes down to that trend line. And if that trend line holds again, folks, it tells you just how strong that trend is. And what does that mean for the New York Stock Exchange? What does that mean for the S&P 500? It means these markets move higher. Oh, you're going to hear all kinds of malarkey about the fourth-year term of a second president and an election year cycle. And let me tell you, whatever you hear out there, I guarantee you that most of those people, or all of those people, don't know a hill of beans about what the cycle really means and how to interpret it. They'll just be reading the monitors. But you stay tuned here at TFNN. We'll give you the real deal, the real scoop. Until that trend line gets broken in the New York Stock Exchange, it's absolutely the bulls that are in charge of this market. So that's Stevie's take. That's really what the market is communicating to you and I. We're just interpreting it together. Folks, stay tuned. Although David White is out today, it is Terrific Tuesday. We got Tom O'Brien, then after that, Andy Heck. So have a great day, and I'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.